a bunch of people jumping on, so we'll give it a minute or two and then we'll get started. We've got a couple of attendees coming in. And then, so if you have questions, if you'll notice that we can't see or hear you, but if you have a question, you can put it in the Q&A on the bottom, or there's also a chat feature. So feel free to ask us a question or correspond that way. But with a larger group, we felt it was probably better not to have everybody have the ability to talk. So. And Dave said I only get about 20 seconds, so that's about it for me too.
My whole job today is to time Nick.
That's right. All right. Did you find your presentation, Ben?
My internet's being a little slow. Give me about 30 seconds.
For those of you who don't know, I am Nick Nada, and I am an advisor here at Shotwell Rutter Baer. I've been with the team for a year and a half or so, been advising for about 13 years or so, been a CFP since 2011, and excited to have some insurance talk here. I know we've been having a lot of questions, peppering Ben with a lot of questions, so we're excited to get you guys that information and make sure you know what's going on. So feel free along the way to ask us questions. Like I said, in the Q&A is probably the best way to do that. Otherwise, you can put it in the chat box as well, and we will make sure we get those answered as we go along. And I know that Ben has some time after the presentation built in for questions as well. So, Dave, you want to give an introduction?
So welcome everybody. We're glad to have you. We've been fielding questions about the changes to Michigan auto insurance as we've done reviews with a few of you over the last couple of months, and it's been a pretty common topic. So we thought it might be best to bring in somebody who really knows what's going on in Michigan auto insurance in general. So we're glad to welcome Ben Rathbun of the Rathbun Agency in Lansing. And he's a pretty sharp guy. He explained all this stuff to Nick and I back over lunch back in, January or February, before the world got so strange and we had other things to worry about for a while. So Ben, if you're ready to go, we'll turn it over to you, and looking forward to the presentation.
Sounds good. All right. Well, I will share my screen with everyone. All right. So I'm going to kind of dive into high level what's going on with no-fault reform. And then at the end, I have a few claim scenarios and examples that we can go through to kind of see real world how it applies to everyone. So I give this to Nick, and it'll be recorded. So if anyone wants the slides later, certainly feel free to ask me questions at any point. Have time for questions at the end, but certainly feel free to interrupt as we go. Just a little bit of background about me. So I am a third-generation agency owner. Have an independent agency here in Lansing. My grandpa and his two brothers started our agency back in 1956. So we are 64 years old this year. I've been working with my dad for about 6 years. He's been here almost 40 years, actually. So kind of worked here all growing up, all through high school, spent college over at Auto Owners, worked in their home office claims department. And I've been back at the agency for about 6 years now. So I went back to school, got my MBA specifically in risk management and insurance, and then have a few insurance designations I put on there as well. Moving on, a little disclaimer, things are changing every day, and I've given this presentation probably 10 times, and every time I have to update it, just because there's so much different interpretation. And to be honest, a lot of this is, it's going to take new case law to know exactly how this is going to affect everyone. And so we've had no fault since 1972, and it's taken decades to kind of have case law in how the law actually affects people. So we're certainly anticipating things are going to change as we progress. So kind of a history of no fault. It was signed back in 1973. And the main reason we have no fault in the first place is because in the past, in a lot of other states that don't have no fault, it's a very litigious environment because people are constantly suing the at-fault party in auto accidents, and the intention, whether it worked or not, behind no fault reform is that essentially no fault is making it so you just go against your own policy. So you're not dealing with suing other people for medical or suing other people to get your car fixed. You're just going against your own policy. So if anyone has been in other states or lived in other states, you probably know that many other states are tort states, which essentially means you're suing the at-fault party every time you have an accident. And so the main thing with no fault was that there's unlimited medical coverage. And so no other state in the United States even offers unlimited medical coverage. And so while we historically have had the most expensive auto insurance, also have the best benefits because there's unlimited medical coverage. So moving forward, back last May, no fault reform was signed up on Mackinac at the Detroit Policy Conference by Governor Whitmer. And there were a lot of different changes. Well, that's kind of a few of them, but we'll go through all of them in more detail. The first one there is order of priority. So currently in Michigan, we have this order of priority. Here's the old one. You first go to your own policy if you get in a car accident. If you don't have a policy, it then goes to the insurance company of your spouse, and then your resident relative, and then it goes to the owner or registrant of the vehicle. A lot of times these are the same policy, but if they're not, these are the different order of priority. Once all 5 of those have been exhausted, people would go to the assigned claims plan. And so that's a state-run fund that every insurance company pays into, and everyone pays a set amount per vehicle every year for every single car. And that's the same amount regardless of who you're insured with. So moving forward, part of no fault is there's not going to be as many benefits for people who aren't actually residing in your household. And so the named insured spouse and resident relative will still be top of the order of priority. But after that, you won't go to the owner of the vehicle or the driver of the vehicle's policy. It'll go directly to the assigned claims plan. In the past, because we've had unlimited medical, the assigned claims plan paid out unlimited benefits. Whereas moving forward, the maximum amount that it'll pay out is $250 per year, or sorry, $250,000 total. So one of the big changes is out-of-state residents are no longer eligible for medical benefits. And so a lot of times people might have kids who live in other states, and if they come here, they now are no longer eligible for benefits from the assigned claims plan. So a little bit later, we'll get into some claim scenarios, and I'm sure many of you might have you might live in other states parts of the year, which can certainly affect your coverage. So we can certainly kind of look at different scenarios and how it's going to affect us moving forward. So the main difference with the order of priority that's changing is the big one we're seeing on our end is kids who don't live in your household. And so we have a lot of people who we've insured for several years, and we take a look at their policy, and they might have their sons on their policy. He's 26, out of college, and he lives in his own house or his own apartment. So in the past, that's been acceptable. They could still stay in mom and dad's policy, and there weren't any coverage issues. But moving forward, if they're not a resident relative, they no longer have that unlimited medical. So once they reach that 250 cap from the assigned claims plan, then they're out of luck. No medical benefits after that. There's also new changes for out-of-state residents. Like I mentioned, they're not eligible for benefits anymore. So in the past, they actually could get paid out of the assigned claims plan, and that's no longer. So there was an ambulance going by my office. Sorry about that. So before July 2nd, everyone had unlimited medical coverage. And so people didn't have the option of selecting anything other than unlimited medical. So moving forward after July 2nd, people can keep unlimited coverage, or they have the option of 4 different options. So the first one is a $500,000 limit. Second one's $250,000. Both of those do have options for attendant care. So if you get in a catastrophic accident and you need 24/7 care on the clock, you can purchase additional coverage for that. The $50,000 option is only available for people who are on Medicaid. And then if you have Medicare Parts A and B or a qualified health coverage plan, you do have the option of opting out. So there are a few requirements on that. All of the carriers are requiring you to send in a copy of your Medicare Part A and B card to verify that you have coverage. And then if you're on a private health plan, so if you're still employed and say are on an employer-sponsored plan, that can be considered qualified health coverage. The maximum out-of-pocket deductible for you has to be $6,000 or less. But there are quite a few things that are covered by an auto policy that are not covered by an actual Medicare plan or by an individual off the marketplace private plan. So I'll get into in a little bit kind of what some of the issues are in opting out of coverage. So we're certainly recommending that people keep unlimited coverage, or if they don't keep unlimited, that they at least maybe drop down to 500,000. But there's quite a few things that are covered by the auto policy that aren't covered by your typical health insurance. And so here we go. So this is comparing your auto no fault and comparing Medicare. A lot of these are similar on the Medicare side to just a private health insurance plan. And we have a few articles on our website as well that we kind of delve into why people who are on Medicare or have private insurance should consider still keeping coverage under auto policy. So I won't read through all of these, but a few things to touch on. Big ones, so 24/7 round-the-clock attendant care. Your auto policy, if you have unlimited medical, will cover you without a cap. Medicare does have a cap on not only how many days they'll pay for attendant care, but also how many hours, and it's only covered for a portion after your auto accident. It's not covered in perpetuity like the auto policy. A few other ones to point on, case management service, that's not covered by Medicare, but if you get in a catastrophic accident, your auto insurer will provide a case manager who will manage all of your prescriptions, your medical care, your therapy, all of that. Your auto policy will pay to modify your home if you can no longer get around your house, or if you need replacement services like someone to come and grab your groceries, mow your lawn. Those are things that aren't covered by Medicare, but are covered by the auto policy. And then there's quite a few things that your auto policy provides just unlimited that Medicare does provide coverage for, but it's limited. So for example, occupational therapy, there's a maximum annual benefit for that. Physical therapy, speech therapy, outpatient therapy, those all have caps for Medicare, whereas the auto policy doesn't have a cap on how much they would pay on that. Wage loss, that doesn't take as much of an effect for people who aren't working, but if you're still working and you're on Medicare, your auto policy would cover your wages if you got in an auto accident and couldn't work, whereas Medicare does not provide wage loss. So a lot of times I get asked kind of worst case scenario, I don't want to pay more for my auto policy. I know I have options, what can I do? There's a lot of things that people need to consider when they're considering opting out. If you have a qualified health plan and you, let's say, lose your job or move and are no longer covered by your existing health plan, you have 30 days to notify your insurance agent or your insurance carrier that you've lost your medical coverage. So if you don't notify them and you get in an accident, you won't have benefits anymore because you haven't notified them that you lost your coverage. So if you're changing health insurance, if you have new people living in the household, new relatives, change a job, those are certainly things that moving forward, it's really important that you contact your insurance agent and let them know that those things are happening. Because in the past, it hasn't really mattered as much because everyone has unlimited medical coverage. I would imagine it's not going to take long after July 2nd where there's going to be case law around this, and certainly incidences where people change jobs and they notify their insurance carrier, get in an accident, and then it's going to be too late when they realize that they don't have benefits. So here's just kind of a few examples, and then later I'll get into more specific examples. So for people who are opting out, if you're on Medicare and you get in an at-fault accident, so in the past, Medicare never received the bill for an auto accident. And the reason for that is that Medicare is the payer of last resort. And so a lot of times people might say, oh, well, Medicare doesn't cover auto accidents. Well, well, that's actually not true, because in 49 other states, they've been paying for auto accidents. And the reason is because if they're the payer of last resort and we have unlimited medical, they're never going to get the bill, because your auto insurance is going to pay unlimited. So moving forward, if you opt out of medical on your auto policy and you're on Medicare, then Medicare would be paying, because they actually would be receiving the bill. So like I had mentioned previously, there are certainly coverages that Medicare won't pay for, but a lot of the typical medical things you would need, the bill would go directly to Medicare. If you have a qualified health plan and opt out and your plan changes, that's certainly, like I mentioned, something that you need to notify your insurance agent or your insurance carrier about. So there's a lot of different aspects built into the law, and a lot of them are taking effect at different times. And so the law was signed last May. Most of the law took effect July 2nd. There were a few things that actually took effect as soon as the law was signed last year, and there's still a few parts that aren't actually effective till a year from now. So kind of the big thing that a lot of people saw in the news was that there's actually a mandated rate rollback. And so all of the insurance carriers have to get their rates approved by the state of Michigan. In the past, the insurance carriers could submit their rates to the carrier, they could immediately start using them, and we call that file and use. And so moving forward, they actually have to get their rates approved before they can sell. So they actually have to file them, wait for the state to approve the rates, and the state is really making sure that they're actually adhering to that mandatory rate rollback. So they anticipated that if you kept unlimited medical, that your rate would go down 10%. And I think it's really important to note that a lot of times people would say, well, my rate's not going down 10%. Well, the law is written to have 10% savings in the PIP portion, the personal injury protection, which is your own medical. That's only one line item of your auto policy. And so even if that part goes down 10%, that doesn't mean your entire premium is going down 10%. And so I think a lot of times people just saw that you're going to save a lot of money, and they didn't realize that it's not on your entire policy. That mandatory rate rollback is only for the actual PIP coverage. So if you select other than unlimited, the 500,000 had a 20% mandatory rate rollback, and then you can see 35% for 45 for 50,000, and then if you opt out, then obviously there's no medical coverage, so there's no premium that you'd be paying for your coverage. So a lot of times when people say, oh, I might have had a friend, they saved 50% of their premium. Well, it's probably because they opted out of medical coverage. And so while there certainly are a lot of savings available, that doesn't necessarily mean that you're going to save half your premium. And if you are, it's probably because you're slashing coverages. So it's important to look at not only what am I saving, but what am I giving up, or what benefits am I not going to have by making that choice.
Ben?
Yep.
On the typical insurance premium, can you give a ballpark of what that line item usually amounts to? Not a dollar amount, but maybe.
Yeah, I would say depending on the policy, it's probably anywhere from 20 to 40% of the total premium.
Okay.
And we're seeing, the carriers all had to get their rates approved, and I'm seeing for even if people keep unlimited, rates are going down probably anywhere between 5 and 15%.
Okay.
And I'll get into this a little later, but there's also written law. There's different factors in what they can use. So in the past, there wasn't necessarily rules on specific rating factors that carriers couldn't use. Moving forward, there's a lot of things that they can't rate for anymore. And so I guess the benefit of us being an independent agent is I sell for several different carriers. And so I've had people who, let's say they keep unlimited and maybe their rate goes up $200 a year because they were getting discounts for things that the carrier can no longer rate for. And so I think it's really important that people look at their coverage now, but certainly we've been doing a lot of internally moving people from carriers just because all of the rating structures are different. And so you might have been the best with ABC company a month ago, and now XYZ company is $500 a year cheaper. So just because people are rating for, or carriers are using different rating factors, it's kind of throwing things all over the place. I've even seen, we have some carriers we have a carrier we've been selling for over 60 years, and they have a legacy system, and then they have a new platform. And so they decided that moving forward after no fault, they weren't going to spend the time and money to do all the technology on both systems. So they kind of discontinued their old system and rolled everyone into the new system. I know a lot of carriers, even on the captive side, which would be like your State Farms, Allstate, Farm Bureaus, some of those carriers as well had legacy systems that they didn't convert to no fault. And so a lot of times maybe people were in an old program and they're now getting thrown into a new program that might be more expensive. So there's a lot of different factors in terms of what carriers could rate for. That's just kind of all over the place right now.
Thanks.
So another part of the law was written into was the MCCA. And so the MCCA has been around for several years, since no fault. And what that did was after $580,000, any claim would be turned over to the MCCA. So let's say if you were insured with auto owners, for example, and you had a $3 million medical claim, after $580,000, they would turn that claim over to the assigned claims plan, the MCCA, and they would be paying out anything above $580,000. And so, like I mentioned earlier, everyone pays the MCCA fee. It doesn't matter who your insurance company is. And so written into the law was a reduction in the MCCA charge. So in the past, it was $220 per vehicle. It's now $100 per vehicle. And so a 55% reduction. So forward also, everyone paid the MCCA before because everyone had unlimited medical coverage. Well, now if you select lower than unlimited, you don't pay the MCCA fee at all. Because if the MCCA pays out over $580,000, if your medical benefit is not unlimited, let's say it's $500,000 or $250,000, you're never going to receive a benefit from MCCA because you don't have over $580,000 in medical coverage. So a lot of times people, if they go down to the $500,000, the big savings there is the fact that you're now saving $100 per vehicle because you're not paying the MCCA fee. So I've had some customers who might have 2 parents, 3 young drivers, and just going from unlimited to $500,000. I've seen some policies go down $600–700. So that can certainly be a big savings. So another part of the law is the medical provider fee schedule. So in the past, when there was unlimited medical coverage, there wasn't a cap on what the health insurance providers could actually charge the auto insurance companies for services. So a lot of times people would see, they might go in for an MRI that's $500, but if they get in an auto accident and get an MRI, the auto insurance company might be charged $4,000 for the exact same procedure. And so moving forward, this part's actually not effective until July of the following year. But part of what was written into the law is a fee schedule. And so it's starting out at, I think it's 250% of Medicare. It's going to go down over the next few years down to 200% eventually. And so what that means is that MRI that they charged $4,000 for, they can now only charge $1,000 for. And so in the long run, that's going to, in theory, bring down insurance premiums because they're going to be paying less out on each procedure. They're not going to be paying 5–10 times what Medicare is paying. They're only going to be paying 2 times. And I think it's important to note that, like I said, this isn't effective until July of next year. And so as everything is kind of uncertain, it's really hard for us to tell exactly what's going to happen a year from now. There's so much that's changing. And I think even if there is a fee schedule a year from now, it's going to take another year or so before the carriers actually realize that savings and before that gets passed on to the consumer. So currently, like I said in the past and still moving forward, you can coordinate your medical coverage with your auto policy. But something that's changing is in the past, you could only sue for death or permanent disability. And so if you get in an auto accident, there wasn't necessarily a reason to sue the other party for medical because everyone had unlimited coverage on the policy. And so moving forward, if someone selects lower than unlimited and they exhaust their own coverage limit, they're now going to be able to sue the at-fault party for the difference. And I think that's probably the big takeaway to take away from no-fault reform, especially for people when you're talking to your financial advisor. It's really important to look at, well, what are my assets? What are my future income earning potential? And, you know, if I got in a car accident and I caused $2 million worth of damage and I only have $500,000 on my auto policy, I need to make sure that I'm protecting myself so that I'm protecting those assets. And so I'll mention that a little bit later in the presentation, but we're certainly talking about umbrella policies a lot more with our customers. And those of you that don't know, an umbrella policy is a policy that provides additional liability above your auto and home policies. And so you could have $500,000 of liability on your auto policy, and then you can buy the umbrella in $1 million increments above that. And so typically, I mean, for maybe someone my age, an umbrella only costs for $1 million, maybe $150 for the year. So it's certainly a way that you can get additional liability coverage that's not terribly expensive. And just because the threshold for suing has gone down, because now people can sue anytime they exhaust their limit, they can sue the at-fault party. It's certainly going to be a more litigious environment moving forward. Kind of went over this already, but no-fault reform, part of what was written into the law kind of codified what had happened previously with case law over the last 40 years. And so a lot of that case law has now actually been written into the law. So like I had mentioned in the past, the threshold for suing was, it really depends claim by claim, but typically it's death or permanent disability that's going to affect you for the rest of your life. Got to tell you, I'm not an attorney, so certainly you can talk to your attorney about any kind of further questions about that. But it certainly is important to note that because the threshold is going down, you're just more likely to get sued than you were in the past. A few other changes. So like I've mentioned, I've talked a lot about the medical portion, and so the medical is covering you and your resident relatives. Your liability coverage is providing liability if someone else sues you for their own medical. And so in the past, the state minimum liability limits were 20/40. So what that means is if you injure someone in a car accident and they sue you, you have $20,000 per person, $40,000 per occurrence. So typically, as an agency, we don't write anything that's in the past probably lower than 300, just because we don't feel that 20/40 is adequate limits. So for example, I mean, we had a medical claim last year that was over $9 million. And if you get sued for $9 million and you have $20,000 of coverage on your auto policy, that's not really going to do you much good. So moving forward, the new minimum is $5,100. But it is important to note, I didn't type it in here, but moving forward, there's a new default limit, and the default limit is $250,500. So if you were to have $5,100, your policy, unless you sign off every policy term, will automatically renew at $250,500. And so I've seen a lot of customers who maybe they had lower limits, maybe they had 100, 300 limits, and they're calling and saying, my renewal went up $100, what happened? And if you look at it, they have essentially, they went up to the default standard. And so the premium increase was just because now they're up to that default standard. And you can certainly decide to purchase less than that. I guess I would never recommend purchasing less than that, but certainly you have the option to do that. And so part of the law is part of no-fault reform is the Department of Insurance wanted to encourage people to keep unlimited medical coverage. They wanted to encourage consumers to certainly have enough liability coverage. And so if you select other than unlimited medical, every policy term you have to sign off that you still want that lower limit. If you don't sign off, you will just default to unlimited automatically. So if you decided, you know, I want to save a ton of money and opt out of medical, if you don't sign that form next year, your policy is going to renew it unlimited. If you signed off on a lower liability limit, and it's lower than $250,500, unless you sign off on that every policy term, you're automatically going to default. Going on to the next bullet, mini tort. And so we're a no-fault state. We go against our own policy, but part of the law is what a mini tort claim is if you get in an accident, you can still go after the at-fault party to recoup your deductible or recoup your out-of-pocket expenses up to $1,000. And so moving forward after July 2nd, actually this part actually took effect as soon as they wrote the law, so actually May of last year. The mini tort limit went up from $1,000 to $3,000. So you can now get reimbursed from the at-fault party. So if you have to pay your deductible and you were not at fault, you can actually go against the other carrier. If they have mini tort coverage on their policy, then it would go from $1,000 up to $3,000. The big thing a lot of people are talking about is all the different rating factors that carriers use. And so moving forward, there's quite a few things that carriers used in the past that they no longer can use as rating factors. A few of the big ones, gender, marital status, home ownership. That's kind of thrown a lot of our carriers for a loop because most carriers, they'll give you a multi-policy discount, but say an auto home discount is bigger than an auto renter's discount. Well, moving forward, they can't provide different discounts for a homeowner than they can for a renter. So all carriers essentially now have a property discount. It's a multi-policy discount they put on. But we've seen some people who are renters have their premium go down more than people who were homeowners because carriers were giving homeowners a bigger multi-policy discount, whereas they can't do that anymore. A lot of people, I get upset. I've heard 6 years that people use credit or carriers use credit for their insurance score. Moving forward, and I guess in the past, carriers didn't necessarily use credit scores in terms of, say, your FICO score or your TransUnion or Experian score. They determine their own internal insurance score is what they call it. So every carrier has a different rating model that they use for an insurance score. It doesn't pull your credit, like it's not a hard hit on your credit, but it's certainly, every carrier is a little bit different. And so I've heard a lot of people say, oh, they can't use my credit moving forward. Well, they can't use your credit score, but they can use your insurance score, which is essentially their version of a credit score. So that didn't really change as much. Another thing that's kind of written in the details that seems like they're changing something that they're not is you can no longer rate off zip code. So a lot of times, people talk about all the time, Detroit is very expensive to insure a vehicle. And I have customers who they're paying, let's say, $150 a month on their auto policy, and they moved to downtown Detroit, and now they're paying $300 a month. And so it was written into the law that you can no longer rate off zip code, but moving forward, they're just going to rate off all territories, which essentially is just rewriting that. And so instead of using a zip code, they're making territories that are based off zip codes. Carriers can no longer use your education, but kind of in getting around that, most of them are making different groups that are like an alumni group. And so while they can't rate for actually having a college degree, they can give you a group discount for being an alumni if you're part of an alumni association. So a lot of these are things that they kind of took something away, and carriers essentially just found a different way to rate for it. So now we'll go through kind of a few different claims examples, and certainly feel free to butt in at any point and ask questions. 1 second. David, I'm presenting. I need you to be quiet. Sorry about that. Rude coworker. Not rude. So our first scenario here is Rose, 75-year-old widow who's on Medicare, and she decides to opt out of medical coverage. So if she gets in an accident, Medicare is going to pay her bills. So in the past, she would go just directly to her auto policy. So now she'll be going to Medicare. So like I mentioned, there are things that Medicare does not cover that your auto policy covers. So those things, if you opt out of medical, you would just be on the hook personally. So if you say your Medicare had a limit on physical therapy and you needed physical therapy every single week, well, once you exhaust your Medicare limit, then you're just out of luck and you have to pay that out of pocket. Moving down to our next one, we've kind of briefly mentioned how now it's really important to make sure that your policy that's covering resident relatives. So if you have a kid who, let's say he was on your policy through college and now he's living out on his own, he left Lansing, lives in Grand Rapids now, but he's still listed on your policy, he's driving your vehicle. If you get in if he gets in an accident now, even if he's listed as a driver on your policy, even if the carrier is rating for it, because he's not a resident relative, he no longer has unlimited medical, even if you carry unlimited medical. So this would then go to the MACB, the Assigned Claims Plan, which now has a cap of $250,000. And so after that $250,000, then he would have no coverage for his medical. So I've had customers that we've just split their kids off and put them on their own policy. It's been interesting finding customers you talk to and you say, oh, I see your son's on your policy, and they'll say, oh yeah, he got married 4 years ago, he lives in Super Colorado. And it's really surprising the amount of people who you maybe thought that their kid still lived at home. And I mean, I had a customer I caught a few weeks ago that the kid was 37 and he was still on his parents' policy, and he hasn't lived with the parents in like 12 years. And they just wanted to help their kid out, even though he's 37, they're still paying the premium. Well, in the past, I would never advise they do that, but now there's really a coverage issue. So now it's really important to make sure if you have people, even if they're listed on your policy, if they're not resident relatives, they need to get their own policy. And so we've had a lot of people who've had to go retitle vehicles or co-title vehicles, just to make sure that the person driving the policy is listed on the title so they can actually insure the vehicle. Our next one down here, a 10-year-old who's hurt in an accident on a bus. So I had kind of talked about order of priority. Order of priority that I shared earlier was for private passenger autos. There is an order of priority for commercial vehicles, for public transportation, for people on bikes, pedestrians, for people who are on motorcycles. We have an article on our website that kind of goes through and shares order of priority for all those situations. So if anyone needs that information, they can certainly reach out to me. But if someone, let's say, has a 10-year-old and they're on a bus and the parents have auto insurance and they opt out of coverage, and so if their daughter gets hurt, in the past, they had unlimited coverage, they would go against their own policy. Well, moving forward, they're first going to go after the owner of the vehicle. So in this case, it would be whoever owns the bus, whether it's public transportation that would go against the city's commercial auto policy. If it was, say, a Dean Transportation or a private busing company would go after the owner of the vehicle. Typically, that person would have coverage or that entity would have coverage, but if they didn't at that point, then it would go back to the parent's policy, any resident relative's auto policy to pay out the medical. A few more claims. So we have a lawyer who injures someone else in an auto accident. The person they've injured selected $250,000 as their medical limit. So in this case, once they exhaust their limit, they can sue the at-fault party. So in this situation, let's say they get sued for $3 million. They can now go after the person who injured them in an accident. And once that 250 is reached, that remainder of the settlement the person would just personally owe that. And so that's why it's really important to make sure you have adequate liability coverage to make sure that if you get sued moving forward, that you have enough coverage to protect you. So we have a carrier who we've been selling for about 50 years, and they actually did a study since No Fault came out in the early 70s, and they looked at all of their medical claims for the last 50 years. And they found about 98% of medical claims are $500,000 or less. So a lot of times I'll have people say, what should I have for my liability limits? And we have an umbrella calculator that you can say, here's how much equity I have in my home. Here's how much my income protection is for the remainder of the time I'm working. Here's how much is in my savings. And then you can see, well, what's the exposure of what my assets are? What do I need to protect? I even just did that for myself recently. And if I look at the fact that I have probably 30, 40 more years to work, I increased my umbrella just a month ago because I have a lot of earning potential over the next 3 decades. And if I was to injure someone in an accident and they took for everything that I owned, I don't want my future assets to be garnished because I don't have enough liability coverage. And so certainly if you want that, let me know. I can provide that umbrella calculator that allows you to just kind of look at your assets, your equity, and then it takes what are your liability limits on your auto policy, subtract that out, and then you see, well, here's my leftover liability exposure and how much coverage do I think I need to get to protect myself on my umbrella. Our next one on here, Beth hits and injures Jamie. Jamie is not a state resident visiting her family over Christmas. Jamie has life-threatening injuries. Beth is concerned she will be sued. So in this case, now moving forward, out-of-state residents cannot get medical coverage from the assigned claims plan. So in this case, if Jamie was to sue Beth, Beth would be personally responsible for any of her medical damages if she was at fault. All right, next one. Tammy and her husband Ken are severely injured in an at-fault accident. They have unlimited medical. What are their options? So this would be just like in the past, when everyone had unlimited coverage. If they're injured in an accident, they're going to go against their policy. And if they have unlimited coverage, they're going to continue to have coverage without a limit for any of their medical damages. Next one down, Ben's wife Linda was in an at-fault accident, and she's been in the hospital for 3 weeks. They opted out. They thought they had a qualified health plan. Ben changed jobs last year, and his health insurance plan changed, providing less benefits. Who pays for the medical costs? So, like I mentioned, you have 30 days if you change health insurance or if you lose coverage to notify your carrier. So if you don't have coverage moving forward, and let's say you had a coordinated benefit, and so you had health insurance, and typically your bills would go to your health insurance. What they didn't pay would go to your auto policy. And so if you don't notify your carrier and it's been a year, once you exhaust your limit, you're just personally responsible for any of the medical bills after that. So it's really critically important to make sure that if you lose your medical coverage, that you notify your agent, your carrier. And I've seen a lot of people looking more to their health insurance and saying, can you provide me a summary of benefits? Can you give me a list of everything my policy is going to cover? And a lot of times people will take that and compare it to that slide I showed earlier that just showed all the differences between Medicare and no fault. So I've had a lot of people take that list to their employer and say, can we go down this list and you can tell me what coverage do I have on my health insurance for all of these different things that I could need if I got in a catastrophic accident. And so that's been a really good way it's kind of hard to know without looking at your health insurance, just because every plan is different. I can't blanket tell someone that, oh, your health insurance will cover that, and you should really keep it because your health insurance might not cover something. It's really important to actually look at your plan, and health insurance companies are getting this question all the time. So they're going to be able to provide you something that will say, does your policy coordinate with your auto policy? If it does, what different benefits are they providing? A lot of insurance companies are now, if you coordinate your health and your auto medical, they're actually requiring a letter from your health insurance carrier on their letterhead showing that they'll pay for auto accidents. Because I've seen a lot of times, if I ask someone, do you have health insurance that covers auto? People will say yes, and then they get in an accident and realize that it doesn't cover it. The big one, a lot of times people will say, oh, I'm on Medicaid. Or they'll say, I have health insurance that covers auto, and they're really on Medicaid. And so a lot of times people don't, I guess not all health insurance is created equal. They don't all have the same benefits. So it's certainly important to know what your plan covers, and knowing what your plan covers just allows you to make a more informed decision on whether you should keep unlimited or whether you should opt out. I'm still certainly pushing that everyone keeps unlimited. But at least if people aren't keeping unlimited, I at least want them to be able to make an informed decision on what coverages they're giving up. Next one down here, Greg's daughter is a high school student injured in a not-at-fault accident. Greg has chosen $500,000 in medical expenses, and his daughter's medical costs will exceed the limit. What options does he have? So if they were not at fault, they could go after the at-fault party once they've exhausted their limit. So once Greg has reached that $500,000 limit, he would be able to then sue the at-fault party for the difference. So they would be able to go after the at-fault party for anything above the limit that he selects on his own policy. So some results of no-fault reform. So like I'd mentioned earlier, costs are certainly going down, but it's just really important to note that even though costs are going down, you can save a lot of money if you slash a lot of coverage, but it's important to know what you're giving up and what decisions you're making. So I've had some customers who the insurance company will send them a renewal packet. Carriers are doing that about 60 to 90 days out, and they see 4 or 5 different premiums for medical options, and they pick the cheapest one because they want to save all the money. And then I call them and say, do you realize what you're doing? Do you realize what you're giving up? And a lot of times, as soon as you explain that to someone, they're like, oh, absolutely, I'll keep unlimited. My premium's still going down, and I still have unlimited. I'll go with that. So I think it's important to just know if you're giving up coverage, just make sure you know what you're giving up when you're giving it up. I don't think it's feasible that everyone's going to keep unlimited. I don't think that's a realistic expectation. I've had some customers who's 85 and he might drive once a year. He doesn't really drive, but a lot of people who are older who haven't given their vehicle up just because they want their vehicle in case anything happens, they don't want to give their car up. Well, if this person is not really driving, he saw it as, well, I'm going to go down to 500,000 or 250,000 because I don't think my exposure is what it used to be because I'm not actually driving and I'm not on the roads. Well, that's a situation that makes sense to slash your coverage. In his case, he saved a few $100s a year, but he's not in vehicles, and so it's significantly less likely that he's going to need unlimited medical coverage. So part of the law is, I think, kind of going to be a cost shift. And so while we're saying people are saving on their personal injury protection, people are more likely to get sued moving forward. So I think down the road, carriers are going to, while they're going to lower their PIP rates, they're going to increase their bodily injury liability rates because they're going to be paying out more lawsuits. So I guess moving forward, I think that's something to kind of keep a look at, that carriers now have to actuarially justify their rates. And so carriers can't raise liability rates just because they anticipate they're going to pay more. They actually have to have the data to back it up. So I'm not necessarily seeing a lot of carriers have huge rate hikes on liability right now, but I would say maybe a year or two from now, once they've been paying lawsuits out, if they're paying more liability lawsuits out, they're certainly going to factor that into their rates. And so even if the medical line item goes down, I'm anticipating that probably that liability premium is going to go up in the next few years. It's been almost 50 years since we've had no fault, back in the early 70s, and there's still a ton of case law that took years and decades to develop. And so we're kind of in an unprecedented place moving forward. And so a lot of times, I would anticipate I'm going to keep unlimited medical coverage forever on my auto policy as long as I can. But I think that if you're going to not carry unlimited, there's so much uncertainty with the new law that hasn't been actually established with case law, that I guess I would just rather be safe than sorry knowing I have unlimited coverage, because I can see moving forward it's just a matter of time before there's going to be people who opt out or select a lower limit, and they now have a $2 million medical claim and they personally have to pay it, and they're going to sue their agent. They're going to tell their agent that, why didn't you tell me that I needed more liability or more medical coverage? And so I think it's a matter of time that case law is really going to kind of more narrowly define how the law is actually implemented. So I guess I've already touched on both of those. Odds of being sued are going to increase dramatically, and then because that's the case, it certainly is more important than ever to look at your liability coverage. And so if you don't have an umbrella, I would certainly recommend talking to your agent about getting an umbrella. A lot of carriers will give you discounts on your auto policy or your home policy for having an umbrella. So I've seen people that it actually saves them money to have the umbrella because it gives them discounts on their other policies. So I think that's certainly a discussion to make sure that you're having with your agent. So, like I'd mentioned, the next few years are kind of going to be unprecedented just because there isn't existing case law that has kind of looked at exactly how this is really going to take effect in the marketplace. And then, like I said, certainly if you don't have an umbrella policy, that's something to look at. I guess I went through that a little quicker than I thought. I've been given this speech so many times, I've gotten it down. So I guess at this point, I don't know if you've gotten any questions in the chat. I can certainly answer any questions.
We don't have any questions yet. Folks, if you want questions for Ben, you can go ahead and type them into the Q&A box at the bottom of your screen on the hosting software here, or into the chat, and Nick and I can pull them up for Ben.
And then I think I mentioned this earlier, but I sent Nick the slides. So if anyone wants a copy of them for reference, they can certainly get those from him. Some of the scenarios, the scenarios didn't really have the answer to the scenario on it. I just kind of talked through them. So if you get the slides and are looking at them a week from now and say, I don't remember what he said, the answer to that was, you can certainly reach out to me and I can walk anyone through that or answer any other questions.
So, and Ben, I've heard different things regarding when people need to take action depending on who their carrier is. Is there any more clarity around that now? Is it just when their policy renews?
Yeah, so I guess I'm hearing that all the time, and it's been a really fun month for me because everyone wants their insurance to go down on July 2nd, and so we have, the answer is it depends. So I have certain carriers, like we suffer, they sell direct and also through agents. Progressive doesn't have the ability to change an existing auto policy for the new rates. So they actually have to do a cancel rewrite. So I had a customer who their insurance renewed on June 30th with Progressive, and they wanted the new no-fault rates. So we essentially canceled their policy 3 days into the renewal and rewrote it to Progressive 3 days later. I have other carriers, auto owners, for example, they can go in and they can just apply the new rates effective on July 2nd or whatever date you pick. So I've had a few customers who, let's say their policy renews June 1st, and they're paying $5,000 a year for their car insurance. Well, it doesn't make sense for them to wait 11 months after no-fault reform to get the benefit of those rates. And so if they're with a carrier that we can change them, we can essentially go in and just apply that immediately. So I would say that, but even in doing that, some carriers are allowing me to do just a midterm endorsement. They're just applying the new rates. Other carriers, like auto owners, for example, they're actually allowing you to endorse the policy, but on the back end, they're essentially canceling your old policy, writing you a short rate policy. And then, so let's say your policy went from 6/1 to 6/1. Well, if they rewrite it 7/2, they're issuing a policy that goes from 7/2 to 6/1 of next year, okay. And then it would renew on the normal 6/1. So really, every carrier is a little bit different in terms of how they're handling that.
So
looks like.
Yeah, one question was, will we be providing a link to a recording of this? And we will. We can send it to you directly, or we'll also be posting it on our blog here in the next day or two. And then we've got a question. Did you say insurers can no longer offer multi-policy discounts or other policy discounts? Could you clarify, please?
So you can still have multi-policy discounts. Just the rating factor for home ownership, you legally can't rate on anymore. So whereas I would have carriers that, let's say, an auto home discount saved you 20% on the auto, but an auto renter's discount might save you 10% on the auto. Well, moving forward, they have to be the same. So you can't give a homeowner a bigger discount than you can give someone who's renting. So because they can't use that, carriers are essentially making a property discount that anyone who has a property policy, they're giving that multi-policy discount to. but the percentage just kind of that is now uniform, no matter what property policy you have, whether it's a renter's policy or a homeowner's policy.
Okay. So the policies still exist. They're just changing a little bit for the discounts.
Right. Yep.
So we've got another question. If I'm at fault in an accident, can both my wife and I be sued? In other words, are both of our assets at risk?
They would be. Yeah. And I guess, I mean, if you're married, I mean, typically you would both be listed on the policy, but even only if one person is listed, if you're married, you both have rights to the policy because you are legally married.
Okay. Not seeing any other new questions right now. As I said, we'll be posting this to our blog, but if you'd like us to send the link to the recording directly, or if you have questions you think of after the fact, you can send them to Nick and I, or you can send them to Ben, and we'll make sure you get the answers you need.
Thank you guys for having me.
That sounds good. Yeah, thanks, Ben. And maybe we can send out that umbrella insurance calculator too when we do that.
Yeah,
that would be good.
That would be handy. I'd like to have that.
If you go to our website, it's just rathbunagency.com. We did a whole video series. I have probably 6 or 7 videos we did that we'll talk about. There's one, why do I need an umbrella? Why should I keep unlimited medical? So there's a whole tab. If you go to our website and just click No Fault Reform on the main page, between the videos and different blog posts, I've probably written 20 or 30 articles about it in the last year. So that's a good resource. And there's the article about the umbrellas listed on there with the umbrella calculator.
Great. Well, good in-depth information. Not a lot of fun to talk about. I don't know, what we could do to give you a fun topic next time, but we appreciate the opportunity, and thank you.
Yeah.
Still
Great.
not
Thanks, Ben.
So, okay. Well, I think we'll go ahead and sign off.
Yeah.
All right.
See everyone later.
Thanks
Thanks,
again,
guys.
Ben.